let's go over some ideas, some of the actions taken. So Carvana, I have taken Carvana off. Yay. 535% on this trade. So I saw this gamma pin from March 20th here, and most of my gains were from this movement here before I locked in 10 of the shorts at 400. And so I did get additional gains here on the 5 contracts. But if the price rallies into 380, the remaining 5 contracts I had an entry cost of 20. So it would pull back almost all of the gains I would have had. And I would have had to sit through, because remember, I sold the Marches at 400. So if these come up and it's still below this 400 strike, I would have to close 10 of my longs for April and 10 shorts and pull that off the trade. Now, if I did that, well, it would pull back a lot of the credits, right? I'd have to give up maybe like 30 grand or something like that. I'd still have 5 contracts for April, but why not just book the 535%? So I did that. Now, if this spread wasn't here that came in, I'd probably hold this and see if we can get lower down to this 285. There was a 200 coming up very strong down here. Really out here till, August. But if it's a case that it rallies up into 380, that's fine. I already made a profit and I could put the trade on again. So I shorted here and took profit here. That's a really nice move, right? That's 100 and, 50 points or something on the stock. Really big move. That's fine. Great. Perfect. On to the next thing, right? We're not greedy. We're trying to book profits here. Okay, bros. Bros price action wasn't that great the last few days. It blew through that 50 pin. And remember, the longer the spread, this is the spread I'm trading here. It's the 50.75. The longer the spread, the larger the error rate I've seen around the top end of that spread. For example, like Reddit. This spread is long dated. It was a leap, and you could see how much error rate there is around that band. It came all the way up, sold all the way below, all the way up, all the way below, right? And so when you have a band really long dated, in this case it's June, it's not too far out, you could have some variance in how low you go, maybe down to this 45. That's where the current gamma spread is. It's 45.55, right? But I did buy additional, about 20 for October. The Aprils may not come into play, right? They may not, they may, who knows, we'll see. It's kind of short term. We do have a lot of open interest coming into it, which is great, right? Those are what I bought, right? And you see more open interest coming in, so that's good. And as we rally into this 55, if we do, that is, because we can fall to 45, then we may have to see what the structure looks like at that time to start getting some money out of the trade, right? That's at least the strategy I'm employing. Now, I would have to sell maybe like April's or, March's, but if March doesn't hold up in that time, it like falls and stays around this 50 level, then my only hope here is to really convert the April to a call spread. But even then, I'm probably not getting $2 out of it, right? It's probably going to be like 45 cents or something. So the idea here is, we really want a move. We really want some type of move upward. And let's take a look at Delta. It looks kind of mixed. Let's put it on expiration. So there's a few things on the, you could see that the charts are now all zoomable. I don't know if I went over that last YouTube video. So they're all zoomable now, which is great. You can like zoom into things. There's a few more settings. there's the largest call for expirations and largest call overall. You can constrain the intensity per expiration. So you can see here's the delta spread. Let's go to gamma. Here's the gamma spread. Here's a gamma spread. Here's the gamma spread. So each pin you could see where all the gamma spreads are. Now if I do relative to overall, those pins, this one, excuse me, each expiration's pin spread, like this spread and this one, this spread here, that intensity is relative to this put, and this call is relative to this call. So it's a relative basis. That way you can really pull out and see where all the concentration currently is in the equity. So those things, I kind of bounce back and forth between those. And the top padding and bottom padding is basically, there was an issue where you had maybe Netflix. Let me see if I can find. Nope. SPX will do it, but it'll probably lag because there's so much data. Let me just show you. There's just so much data in this. Okay. You could see there's like some crazy like calls at 13,000 and way up here, right? And when you load the chart, it's like you don't want to see this view initially. It's really bad because then you have to like zoom every time. So what the top and padding does is it'll just constrain the view 30% on the top and 30% below. And that's what it is now. It's at 30%. I think default is 20. Could be wrong. And what also does here is like if I load up some names here, the initial view will look for the largest put or call and constrain that to the right side with a minimum of 120 days this way. Okay, so if I go right, I'm just pushing the right arrow. I think it's open interest. I think it keys. Oh, sorry. That's right. Let me go back. Hold on. There we go. So you could see the largest is here, but it's so upfront. It's only 15 days. So the minimum is 120 days. Now, maybe I'll put a setting for that if you guys want. But right now it's 120 days. That's what it creates a good view, right? Next, boom, really good view. You could see, like I could see the long-term spread in Reddit. And I'll go to strikes because it helps identify where everything's sitting. So with Reddit, I could see there's the spread. And if we pull down here and go to constrained to expiration, you could see like maybe this 95 in May would be the point at which you'd probably want to buy 115s, maybe in October, right? Maybe December, somewhere in here. And you would anticipate, prices coming down. You'd probably want to wait for earnings before. You probably wouldn't want to place a trade before the earnings because it could probably just push down, but up to you. But, you want to buy somewhere in here and then look for that 220 target, right? So you can use that constrained view to kind of get smaller, targets on these things. So yeah, I bought Bros. I bought the Octobers. At first, I was the only one showing up, and it looks like we have more calls coming in here. This is the October. That was my buy. On February 20th, there's my 20 right there. That's the 20 I bought there. And it looks like someone bought one. So it was maybe, I don't know. I don't know who else bought one, but someone else bought one. I am trying to like look at this range here as the target, and I think open interest is lower. No, there's is it delta? I can't or maybe it changed. Sorry, maybe it changed. Okay, it was delta. That's what I was remembering. So you could see like a lot of the resistance here will probably be at 60, and you can kind of anticipate kind of price action here because most prices are going to try to move down with the moving averages. And so if we do get up into that, let me go back. if we do get up into the 60, it's probably like the moving averages are going to be up in there, right? And then you'll probably get some resistance. That's what I'm anticipating at least. And then once we're up at the 60s, then I could come in here and either get rid of, I could do a bunch of things. I can maybe sell half of the Aprils. I could short 25 of the Marches, or I could short maybe, I don't know, the 65s, 10 of the 65s for April for this October. So basically I can convert these to diagonals. I can convert them to call spreads. I have a lot of options. We just need the price to rise, right? And you can see here, this is about a 10% premium to the long leg, right? It's $6 to 60. And what I'm looking for is if we get a decent rally and we can come up into the 60 range, you could see kind of like at the money for March is about $3, which as time progresses, you could see like kind of at the money, it kind of drops, of course, right? So it depends how quickly we get there and how quickly the implied volatility changes. But you could see that if we do rally to 60 fairly quickly and these prices hold up for March, I could come in here and assume 60 would be at the money and call it $3 or something. Well, I could basically pull out, I could reduce my entry by $1.50, right? I mean, I'd sell 10 at 3, right? So I could reduce my entry and pull money out. That's all I'm trying to say. That's like the game plan for bros. And this was really nice price action here, especially when you look at VIX and VIX starts to rotate. It's like we've had this elevated volatility profile, and that has obviously hasn't been helping with prices. They're just prices are pushing down because puts are becoming more expensive. So dealers have to hedge the downside. Now on the VIX, the gamma pins, the delta pins, the open interest is all at this 1825. And so we're going to have to survive through March 28th. And remember, March 20th is the equity option OPEX, right? So this is 2 days before the equities expire. And typically, if you could see that we had the OPEX on Friday and the market since then has rallied, that's actually a good sign for the market continuing to go up. And you just watch that after OPEX. After the Friday OPEX, which was 20th, so 23rd, 24th, 25th, the market has been rallying. That's a good sign. And you can see that curve. And so that is good for anticipation of volatility falling. And so we just have to escape this kind of spread that's been sitting there. And volatility has been hunting that kind of spread. It's been pushing up into that spread. So it's good to see that your equity is rising when you start getting that peak in vol and the collapse in vol. And especially with this price action, right? You kind of see selling. Look at that, just all selling. And then below that pin, you saw this kind of aggressive buying. So that's a really good sign so far. It's going to have to hold up here. And so I'm just kind of tracking that. So you can see I have Octobers. Those are kind of a ways out there. And kind of one of the reasons I was doing this is typically you could just see how long this kind of descending triangle, or whatever you want to call it, has been. And this is kind of really tiny relative to the correction. It could work. It's okay. But I think it's a little bit up front. I don't have earnings involved with it. So maybe this was a mistake. But I'm more comfortable with Octobers because it makes sense that I'm giving this a long time frame relative to the correction here. And I'll have one earnings, and I'll probably also have another earnings somewhere over here. So it'll encompass 2 earnings reports, which is really nice. So I do have those October there's in Bro. Those Octobers in Bro. And we'll just kind of hope that we can get some nice price action here up into help out this April going into it. And Google, I demonstrated over here. So Google, I had this diagonal spread, this 2-to-1 diagonal, and I took profits down here. Let's go to the hourly. I took profits down here on the spread. I made 43%, and I saw some pins that were at 305. Maybe this has changed, but at the time there was a 305 pin for OPEX. And you can see, look, right after, well, that was OPEX. So I generally see that too on Fridays, especially OPEX. You get really strong directional moves in the large caps. I've just always seen that. It's always been like a thing I've observed. Maybe there's more hedging activity. Anyway, I shorted 5 of 20ness. Those were 300s. So I shorted February 20th, 5 of them, because I had 10 up here for June. Very aggressive play, very aggressive. And I was just really banking on that this pin here would hold through Friday, and it did. So I collected 5 times $570. And my blend for these Junes out here, my effective entry is $5.40. So I pulled 60% of my money out of this Google trade, but that does not include my 43% gain. I didn't put that calculation in there. So it's actually less than $5.40. In that case, what is that? It's got to be, what, 10% lower or something? More than that? I don't know. I can't do the math. So right now, I did also short when I shorted these Februaries. I shorted 5 of the Marches at 300 for $8.75. So that helped pull down my entry more. But remember, now, because I collected the Februaries, it's a 2-to-1. So if price falls, I make money. If price stays within here, I don't want it to go crazy and hit this upper pin. If it goes up there, I'm probably shit out of luck. But I've already pulled 60% out, which is fine. That's good. But if we could just get it to stay in this level, and I can collect this credit, then what I can do is then I could go out till April, and maybe I could short 280s, right? So it'd be like a staggered 2-to-1. So I'd collect this one. I'd have 10 left for June, and then I'd short 5 at 280. Well, one of the better things to do is when you get these big moves down, then you place your credits to collect your credits. And then if it rallies, you collect your credit here. It's like a hedge, basically, against your position. And then if it falls to 280, as an example, well, at that time, I could short at the money. I could short 260s. And then if you get a rally, you collect the April credit, right? And so you're just on move downs or trying to collect credits and try to pull money out of the trade, but still be directional that if it continues to go down, we can make money. So Google, I'm just managing. I'm not going to touch this until March. I'm not going to do anything. I'm just going to let it sit there. And this trade is really if the Mag 7 names just really start getting hammered, like people rotate out of it. We're already seeing that now with the Mags, X-Mag. Is it Mags, X-Mag or Mags, X-Mag? Yes. Oh, sorry. X-Mag, Mags. This one. So since November of last year, you could see the market is broadening out, which means that you're starting to see money either push into the X-Mag, or you're just seeing selling in the mag. It could be either or, right? Maybe short covering, who knows? Who knows what the dynamics are, but you could see outperformance. That's all you're trying to see, right? So, and Google has been really the one that's, kind of sitting up here. If you just kind of look at, Google relative to like the SPX, you look at Microsoft, and they're kind of I guess it depends where you start um, the point of this, but you can see Microsoft is underperforming the market, Google outperforming the market. See, Netflix underperforming, well, barely since that point, but you could see since this like April, definitely underperforming. So Google's just one of those things that I believe if you include like the A and is it B shares or C shares? I can't remember. If you include both of them, it's C. Yeah, A and C. If you include both of them, it's like over 5-6% of the S&P 500. So this is kind of like more of just like an equity hedge on the overall market, that if the market really turns over after March, we'd collect our credit and then the market would turn over, and this would be kind of our hedge for just kind of putting the idea out there that if the market really does rotate over, then we have a single name that could probably help us here, right? It's one of the high mag performers, right? So it's kind of a hedge, if you will. FIG did really well below this 25 pin. They had earnings. It pushed through it, but I'm just being very patient here. A really good price action with volatility falling, but when you see this type of price action like this, especially around a pin, what you really want to look for, if you can get it, is some type of consolidation back lower and watch for the push higher. And then that's probably a really good signal that you're at some type of bottom. So just being patient. You're not gonna miss these trades. Even if it rallies here and you get a pullback, you could probably enter there or something. So you're not gonna miss these trades, right? You have plenty of time. You don't have to force things, that's all I'm saying. Okay, so I have a couple names here. Let's see, that's Bros, that's Google. Reddit is the big one I'm waiting for. I want this below 115 to capitalize on this spread. And maybe we'll have to wait till May, who knows, but I'm just being patient. Just being really patient. Enphase Energy, I was thinking about a short in this. They do have this spread here out till June. It is an energy name, but it's in solar. And there's a lot of talk right now that all the data centers are constrained by energy. And I don't know if that would be the best idea to put a trade on with, if you're thinking macroeconomics. But it's definitely got a spread here, and I think it is open interest as well. Yeah, it's a pretty defined spread. Open interest, delta, and gamma is all sitting there. So maybe somewhere up here, 55, 57, maybe 55, you see all these calls. Maybe you take a trade and buy, I don't know, these 50s when you get up here for a downside. It could be an idea. So it's on my watch list, right? Haven't put the trade on yet. Live Nation, I saw this spread down here, but I wanted to wait a little bit to get in, and it looks like it's already moved. So that's just on the watch list. I'm just watching that spread there. NSIT, I don't know why, it's probably a miss. I don't know why that's on there. That's probably a misclick. Okay, TripAdvisor. I saw this long-term spread, and they had earnings, and the stock was down, so it's not the greatest sign. So it's on the watch list. Maybe we'll see what happens around $8. Maybe we could trade the spread. Who knows? This one, not sure why this is on there either. I was testing a few things. Maybe I clicked the wrong stuff. Okay, I saw this spread here. Aerospace and Defense. AVAV. Kind of a lot of puts down here, and it kind of rejected that put. It's not the greatest sign, but it's an idea, right? That's an idea. SBET, there was this $5, $10 spread, and nice little move there so far. Not bad, but just being real patient, not trying to force trades here. I'm looking to buy below a spread, and I'm looking to sell above a spread. So for example, Unity might be an idea. I'm not a fan of all this put stuff down here, but you see the spread, $20, $40. Let's see if it's an actual open interest spread there. Yeah. So that's a good spread. So you could see that from here, it rallied up. And so this is the type of move that you're trying to capture. And look how deep this went, right? It went from 20 to 14. That's a pretty big correction there. And then it went all the way up, and it took about from April to August, October maybe, right? So really nice move. That's what you're trying to capture. And then look at the error rate here. It went up, went below, went up, went below. So it's trading around this 40 pin. Now, one thing you can validate is that if these historical bars here, these lines here, are related to this one, you could click this, go to open interest, and look at where big ads are done. So this was done at the end of 2024, and now we're starting to see big ads here in February. So you can see like where additions are done. So this has kind of been around since the end of 2024. So that's been there way back here, right? So it's always good to check your spread to see how long it's been there. I did notice one. I'll have to remember what the name is. But anyway, that's what I'm looking at, right? Maybe we could go to bars, and you could see like there's this $15 down here, and it's pushing to the left side of the call distribution. And maybe we just got to wait on this one. But it's an idea that spread exists, and we could definitely trade around this earnings. But this isn't a great sign. When they beat top and bottom line and the stock goes down, it's not the greatest sign ever. So I'm just going to be a little patient with this. And it's sitting till January. And you could see how much of an error rate you can get around these things, right? Around these pins. So if it goes up, like it would go down here. If it goes up and then pushes down, and then maybe it pushes up here on earnings and you get some upward movement, then you could trade that spread. So I'm not trying to force things. I'm just being very patient. Very patient. TTD just had earnings. And I think they were top and bottom beat. I guess there's kind of an issue where earnings are the same date as the chart and it doesn't print it. And I don't know. There's an issue that I got to fix. I don't remember what the top and bottom are. Let's see. TTD. Let's see. I think they guided down, which is okay. That's the past. You don't want to trade the past. You want to trade the future. Okay, they reported 59, 59, 0. Estimate 35 versus 59. Okay, so they beat the reported. I don't know why they frame it like that. So weird. Let's see. How come we can't find this? Who's it? Live Squawk? Live Squawk? Live what is it called? Squawk? Live Squawk? Squawk? Such a weird name. Revenue. 4 hours ago. Current price, upside, takeaways. Okay, whatever. Revenue up 234%. Stock price down. Yeah, that's typical. Come on, give me their estimates. Does TradingView not do this? Okay. that was probably easier to do. Let's delete that. Okay, there we go. So barely a top line beat. That's not the greatest thing, but a big bottom line beat. So this is definitely trading on top line numbers, not earnings. But that's a pretty nasty fall here. It's 1, 2, 3. It'd be 3 movements lower, and usually that's it, right? And there's this big $20 pin. That's an open interest up to $60. Is the gamma there? The gamma's also there. Delta. Okay, we got a lot of call delta here, call delta up there, and there's not much stuff down here. So this one might be a turnaround play just on this liquidation, that if we can get it around or below 20, we'd have to go kind of long term on this because it'd be a turnaround story, right? We're going against the grain. So we're going to need time for the market to rotate and come back around and really play through this. And this is out till September. So we're going to have something out there like in October. It looks like Octobers are showing up, right? So maybe an October play on that. So that's just another idea. And that's all I got. But right now I haven't looked today, but I have a spread screener that I saved. You just 1 billion liquid, no ETF, both open interest and delta, and we could just do greater than 60, and I can sort by delta as a percentage of float, and it's always BE. BE is always at the top. Now this spread is kind of interesting, but this is related to energy, and we know that all the data centers are energy constrained, so I don't know if I really want to trade against that theme, but I can definitely see there's a spread here for June. And this kind of reminds me of Oklo to a degree. If I can recall Oklo for you, that Oklo had like the 150 pin, and it went up to like 190 because it was squeezing, right? It was a delta squeeze, and then gamma kicked in, but then it completely rotated. But Oklo is a totally different story. It's like pre-revenue or something, right? Like it's not BE. But it reminded me of this. It was 2025, not August, 8, 9, 10, 20. Here. Yeah, 150 pin. See, I remember. It had like this really strong 150 pin, but that was there for a long time. I think I saw that around here, if I recall. But it blew through that. You could see it went up to like 190. And it just completely rotated. See? So that kind of reminds me of like that whole rotation thing, but I'm a little bit hesitant to kind of short energy, right? And so this may push up, much higher. It might squeeze up into this like 220 level. Let's see. This has to be all positive delta. Well, no, there's a lot of... oh, yeah. Look at... it's just all calls. There's some upfront puts here, but it's just all calls. Look at this, all calls. So like any upward movement is just a tremendous amount of buying to hedge all of this junk. So you could get a squeeze. You just get a continual squeeze. But that spread is pretty defined. It's been sitting there for a while. But I'm not going to trade against it. There's M phase again. You see that's the spread. H row. I'm going to zoom out a bit. So that's one thing that sometimes, because of the top and bottom padding, you're not going to see the spread if there is one. So you just zoom out just a bit there, right? So that could be a little squeeze there in H row. Drug manufacturing. Okay. I mean, you got a lot of in the money delta. Is it also gamma that's sitting there? No, it's not. So maybe. So it's nice to have really, gamma's really the pin levels they really trade. But most often than not, you're going to get upfront gamma because it's going to be most pronounced at the money. But that's why just make sure that if you're looking at the spreads here, that you're looking at one of these, just so it makes sense, right? So I'm looking at open interest here. So I'm just going to I'm just pushing the right arrow, kind of eyeballing something that that would be on my radar. That's just like a perfect setup is Reddit, right? And I'm just waiting below 115, very patient. Maybe I won't get it, right? That's a great setup. Man, I've had all those opportunities to trade these things. They're really big moves. And I made money on this, but I screwed it up. Already went over that. So I was trading it to the spread to the downside, and then we're going to trade the spread to the upside. That's all we're going to do. We're trading both directions. Let's see if we can find, look at that. It just bounced right on the pin. And Nvidia just reported, and this is interesting. If I go here, turn on gamma. So we have a 200, 180 pin for March. That's the March OPEX. Well, what do you think happened? What do you think happened on earnings? Right up into the 200, sell off on the 200. Selling right at the 200. See that? That's what the gamma is. What did I say? This is 180 now. See? 180, 200. See? So these pins really help. Okay, let's see what's next. See if I can find something interesting. That one's sitting like right in the middle. Cvna. That one was kind of interesting. There's Live Nation. Seg is utilities. AD, not really interested. I'm looking for things that have kind of a lot of open interest that can help drive the prices. Really big squeeze there on oil exploration equity. Maybe on a pullback here to 450, you could trade it up to 600. It's an October spread, so I'll just put that on there. It's an energy name, so I do want to be involved in energy because everyone's saying that's the constraint. So maybe that's the next trade, is energy, right? It just goes from like memory, semiconductor equipment, like memory to, data centers. It's like all the money's ping ponging, right? They're all going to the different themes. Yeah, there's AVAV. Went over that. Keep going. Airbnb had a tight spread. Yeah. You could see that it's been trading within that spread for a long time. There's some error rate. There was earnings, sold off below, pulled up below. There's some error rate around that. So long term. BKV, too thin. Chemicals, don't know if there's not really much open interest there. No open interest. No open interest. You got to be careful with the open interest thing over here, because if the stock price is like 1,500, you're not going to get 1 million contracts, but you can miss the spread, right? Or vice versa. If like the stock is $1, you're probably going to get 1 million contracts. So you just got to you can't really turn on that setting to filter out these things. You just kind of have to step and kind of take a look. Sorting by market cap tends to help. But I didn't see anything that was incredibly too clear, except for like Reddit and some things I already went through on the watch list. UNH has a clear one. If I recall, I think the gamma was smaller than this. Maybe it changed. Yeah, gamma was smaller, but open interest is bigger. So there's the range. 200, 350. It's probably going to 200, mostly because Donald Trump is really going after the health insurance companies, Obamacare and all that type of stuff. So maybe on a rally here, you can probably trade it down to 200. That would be my bet. That might be an idea. I'll just put this on here. Keep that on the watch list. It has a long-term defined spread, so I'll just keep that on there. Is that Warner Brothers? No, looks like it. Oh, I thought it was Airbnb. That's okay. I was going to show you one of the equities that had like was it TTD maybe? I think that's what it was, or maybe it was TripAdvisor. Okay, maybe it's something like that. So you can see like these calls here were added February 4th. See that? So these were not around back here, which would help drive the price lower, right? They were added right here. See? And so that means maybe this spread down here, here's the spread, this one, was this added February 4th? The 11th. So that was added after. The puts were added after. So that was a few days after. It's this bar here. So that spread is being added here. It's not being added like back here. So it's very important to kind of see like where the spread is coming into play. That's kind of like what I was trying to demonstrate. Because if that spread was there for a long term, you can just anticipate that it's going to continue to drive to the bottom end or the upper end. And if it's coming in short term, it may signal maybe some rebound because you're starting to get interest long term into those plays. Okay, not seeing anything really interesting. And just do a quick check on the market cap side. UNH ITUB. Okay. SEG we looked at. Bank of New York Mellon. That's a pretty tight spread. I mean, some of these spreads you need. Okay, Monster Beverage. Okay, that's just pushing higher. Some put delta potentially there. BE. There's Reddit. SQM. SNN. I'm just trying to think of names that cross my radar. There's AVAV. Yeah, so I'm just not seeing anything interesting as of yet. Remember, I'm waiting for like really big pitches that I could just sink my teeth into. And, you know, kind of a word of advice here is like, if you have, let's say, $100,000, well, you really don't want to lose that principal. And what I mean by that is you don't want to place like a $20,000, $50,000 trade on that principal because you're risking your principal. What you want to do is you want to get in a rhythm to where you start becoming hot. Now, this is advice from Drunken Miller. It's advice from George Soros. And I totally believe it after I've lived it, kind of worked through it myself over the past 5-10 years, that it's really important that on the principal, you're not really risking a lot. So you can do maybe like a $2,500 or a $5,000 position. And if you lose that trade, it's only $5,000 on 100K. It's not a big deal, right? But if you start getting 300, 400, 500% gains out of those, well, then you could start betting bigger because you're using the house money. And once you start losing money, cut back. Don't try to like chase the losses with bigger positions. Don't do that. Just if you're using house money and you're hot, bet big. But wait for the pitches. Don't force things. You don't have to trade. You're not trading people's money. Like, you know, you're not gonna miss out, right? Just be patient with things. And it's not entertainment. It's a business. So here's the S&P 500 gamma strikes. You could see we may push this 69.75. That's well, it's a weird calculation. I think that's using I think the UTC is wrong on that. Yeah, it's probably a bug. I'll fix that. Right, because this would be 2 days technically. Right, but it's using like my current date, which is weird. So I'll fix those time zones. That should say 2. And then next week, there's the 7,010. And it looks like we can kind of push up. Right? I don't see anything really crazy here. 68.50, 68.90, 69.30. Yeah, this doesn't look like anything standing out to me. This 7,010 is pretty big. That's for this week. So maybe Thursday 69.75 and then Friday 70.10. Like that would be one thing. But look at this. March 20th, that's the big one. So my anticipation is that March we're going to go to this 70.50. And remember, March OPEX is when everyone's rebalancing and doing all the funkery for quarter one into the next year. And after that date, if we're at 7,050 on March 20th and OPEX falls off, that's when shit can hit the fan and start rotating downwards. So just note this spread, this 70.50. Well, it's not going to go down here. That'd be like something catastrophic would probably have to happen. Like, I just don't see it going down here. Maybe 3.54%. I mean, it's not that big. But more often than not, the 70-50 will probably be hit. So if I go here, let me, oops, wrong one. Go here, collapse this, and I'll do this. 70-50, March 20th. And then I'll put 6,700, right? So that's the March 20th spread, just to keep this on the radar. Right there. So my bet is we kind of push up into this 7,000, 70-50 zone. That's just my bet. And that'd be kind of an interesting rounding there if it happened. And we'll see what happens after there. NASDAQ. Well, NASDAQ 100. So this spread is, for March 20th, is, oh my God, I can't. Hey, now we got Zoom. Is 25,075, which is a bit odd, and this 24,000, right? That's kind of the big one. So this has changed. 2575, is that what it was? Did I already forget what it was? And 2400. Is that put gamma? Is that the gamma? Yeah. Okay, so I can kind of put those levels in there. And that's the strongest one, of course. And you can go to constrain. And this could really squeeze up to 26,000. There's a lot just sitting there. See that? Out till that date. So you could get a squeeze here. You need volatility to compress, but I mean, I don't see anything. It looks like we're in positive gamma now. Delta. Positive delta now. Yeah, this could probably squeeze. That spread's probably not going to survive. So that kind of looks like a upward movement, which means volatility down, which means the market will most likely rally. And it kind of makes sense, like Cvna was sitting on that 320, 380 pin, right? So maybe it rallies into that 380. That'd be great. If it rallied into 380, I mean, that means we made the right decision, right? TMC, there's like a $5. I'm trying to just go over, I'm just trying to go over everything. Okay, this looks like it probably changed a bit. Let's see where it's all sitting. Yeah, it's this $5 down here. It's looking a bit thin. It's not very clear. I don't see things that are very clear in that right now. Metsi has a tight pin. That's not, I mean, this is the thing I was looking at, 1530. That's been there for a while, but the gam's kind of strong up front. It's staggered there. That'll go away. You can see this one's was added 11.6 of 25. 11.6. Okay, that's been there since here. So you could see that it's probably going to trade in that range for a while. Right? That was added over here. So I'm just waiting maybe something below 15. Maybe we can look for, maybe it's $13 on this pin down here. I don't see any more down there. Yeah, maybe this $13 here for April. There's 13 long dated there. So maybe when it's 13, we could buy some 15s. Maybe September and try to trade up to the 90 as an idea. If they just have earnings. It's OPEX. I don't have that on here right now. That's a bit odd. But yeah, so earnings is coming up. Maybe it'll push it down to 13 and we can look for a play. And there's Reddit just kind of sitting there. Markets over, yeah, who cares? Tariffs, who cares? Market is all about derivatives. Yield curve kind of coming down, not doing much. Oh, AMAT. pushed up. Yeah, this has been squeezing. These data center semi-equipment plays have been having a nice squeeze here. ASML, that's a monopoly. Data centers have been all over the place recently. IREN 30 and $20. I don't know if these are still in play. I usually look at open interest just to see where everything is situated on overall basis. Wow, it's way up there. Someone's buying some big dick long term, and they bought this at the end of 25. So they bought that kind of in here, in this area here. That's kind of crazy. That looks like an outright because I don't see a comparable put side. So that looks kind of like an outright. That's kind of crazy. So there's long-term support here till 28. Look at that. So definitely buying opportunities here. We just have to get the right entry here. So 35s is showing up. It's all puts. It's not too clear. $30 is sitting there. So $30 still makes sense. I really don't see this $20 anymore. So I'll keep that there. Moving average would probably make sense around there. Move that up. And Nebius has ClickHouse. Has like 20% ownership in ClickHouse as well. And ClickHouse is great. So maybe that's also a nice play. Let's see. All call Delta. So it's probably squeezing. Gamma. Not too clear. I mean, there's just really upfront at 110. Yeah, not too clear. 60 would be great if we got 60, but I'm not seeing any like really strong spreads. They're buying long-term calls on that as well. That's out to 27. Really big spread there. A 10-200 spread. So I think we have to buy these on a pullback. We just have to figure out where a good zone is. $60 would be nice. That'd be right where all the moving averages are. I don't know if we're going to get it, but that'd be a layup trade. So I just put kind of 60, and usually I do below here. I just put things on there like that. Apply digital. That doesn't look very healthy. You know, maybe they're going to get some liquidation there. Just technically. Okay, so that's sitting all in the money. Is it Delta? Okay, they have long-term in the money Delta, which is very directional. So if you get any whiff of buying, this thing's going to squeeze like hell. If you get any whiff of selling, this thing is going to sell like crazy. Because this is driving all of the movement right now. And that's probably, well, let's see maybe there's upfront gamma. Okay, the upfront gamma is a wonky spread, but here's the spread. 22.35. That's the spread. You could see that it's sold above that 35. It's sold above the 35, sold above the 35, sold above the 35. See that? And so it's trying to trade within this range. It bought below this 22. It bought right on the 22. See? So it's kind of trapped within this range. Now, click on this. But look, it was added February 13th. February 13th, right here. So the spread was added right here. How about this one? Well, that's just been since the beginning of the year. Puts have been bought there. So they've probably been driving it down the whole time. They've just been buying puts and buying puts and buying puts and buying puts. And this one came in to solidify. So just get an idea of where things are being placed. But you could definitely see it's trading historically within that range. So nothing like huge breaking out here. Nothing significant. But that's all I got, guys. I've just been really patient, just trying to manage the positions and trying not to overtrade them, just trying to let them sit so I can make money. And that's about it. And I'll keep you posted. Have fun. Okay.